day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday, the 15th of August, 2019. Well, as you take a look, you were down in the wheat and the beans, and after a monster break in corn, you're stabilizing, only up 3/4 of a cent, but for the first time in a while, I can say, since Monday, the market's not a down day. The market is stabilized. You're still looking at falling U.S. interest rates. We got down to record territory on lows today in the 30-year bond, down nearly 1.91 and a fraction, settled a bit higher than that. And in the 10-year notes, we're sitting here at the 154 area, 155. Stock market, a super volatile day. You know, you see a range of 500 points, but it was up, down, sideways. Big volume, a lot of trading going on. So as we take a look at the bean market, for the week we are down 15 3/4 cents. That's not monstrous in itself. The market is not too far away from the 18-week moving average of closes. That's 866 1/4, and I'll label that the resistance in the market right now. When I look at the daily chart, I've decided to just leave this line on as a downtrend line. We've already filled a gap that I had drawn another line to, thinking that maybe we have a falling wedge type pattern. We still might, but I'll worry about that. I know mentally what I'm looking at, and I'm still looking at a downtrend line at that point, and I'm looking at no trend on the swing line. We have a pattern of a higher high, a lower low. That is not a trend. The battleground has been, how many times have we hit in a row the 18-day average of closes? I think you'd agree with me, quite a bit. But we didn't get to the 100-day, and the question is on the downside, the lower Bollinger Bands at 855 3/4, will the market get there, or is it just going to pause and trade in this general area? That's going to be the big question for the market. Momentum is not giving us a story. It had been going sideways. It's starting to point down. You need another night of seeing that, but if it points down, then that number could come into play. Resistance still at that 18-day average of closes. In the meal market, you made a new break low for this particular swing. Today you got to 296, 60, came back up from there, closing 296.90, not very much. So the market laying down, oversold territory, ran back up, and we can see here from this lower Bollinger Band, finally got to the line in the sand, as I like to call it, that 18-day average, and from there went today and made a new break low for that move. In soy oil, this market is better supported than meal, but not trending. Lower low, higher high, supports back in the combination of the 18-day and the 100-day averages. You've got the market with an upside bias and momentum pointing down. In the corn market, you can see how this market's just running, that lower Bollinger Band. You settled today at 371. It's actually another day under that band, so you have today under it, yesterday under it, the day before, and this day we had settled at 92 3/4 under the Bollinger Band too. So you could actually say it's 4 days in a row, which gives the odds of the market staying under that band about a 1% chance tomorrow, if you follow my theory on this, that each consecutive day under a Bollinger Band is one of the 5 percentage points that the market will trade out of it. It's a theory. It will be broken. I've seen it broken, but it's not often broken. And when I say not often, not often. Go count on the charts. So I expect the market's going to move back to the right-hand side, and those may be waiting to sell the market. Maybe they'll have a shot at a bit higher prices. Does it have to happen? No. You can see you're in a free fall, but that's what I'm expecting. In the wheat market, you have a pattern of lower highs, lower lows. That's a downtrend that was initiated today. Problem is it was initiated in oversold territory, and you've already hit that lower band, moved to the right-hand side. We'll see what it does. And remember, the theory of Bollinger Bands is you'll trade within them 95% of the time. If you go and look at charts, generally, word general, very big, broad word. First time you hit the band is often an area that I think pros take money off the table. I'm assuming that to get to the lower band, they were short. It's a big assumption on my part, but you're under the bias would have been down at that time. So that's how I use it. If you get to the upper band, I'm assuming they were long, and that's an area that they'll come out of some of the money. I admit I'm assuming that. In the sugar market, the trend remains down. lower highs. You have higher lows, though. You got down today to 1151. I would have been so much happier as a bear to see 1149 hit. It wasn't. So now I got higher lows, lower highs. If 1150 is taken out, the 1135 zone's the next area of support. If you rally from here, the battleground's going to be possibly that 18-day average at 1185. In the coffee market, you kept the embedded reading. And, I thought that you were losing momentum when you, right here, lost the embedded reading. You regained it. You came back out of it. That normally means that you're losing momentum in the market. And as you can see today, well, you didn't do very much. You were up 10 points. But I question the momentum to the downside now. In the cocoa market, still on a train to the downside. I was writing tonight's report, and if you take a look at this, you would think deflation hit this market, the coffee market. By the way, why don't you go to your Starbucks and tell them, why are you not lowering the price of coffee? Just back in July, it was $1.18. Now you're 96 cents. Let's call that a pound. Come on. Where's the lower price? They'll never give it. They say they give it away in labor, rent, cups. As you take a look in the cotton, this has been a bear market rally. I say bear because you're still under the 18-day average of closes. You're working off an oversold condition. In the cattle market, you finished today up 2.5 points, not 25, 2.5 at 98.50, 2.5. You're still under the lower Bollinger Band. You've had a run under that. You're oversold. We'll see if it gets to the right-hand side tomorrow. And in the feeder cattle, you laid a bear trap. You had an outside day down. You took out that day's high, and you've been working up a little bit right here. I don't call this an easy chart in any manner whatsoever. Last in the hog market, you just keep failing. You've got a series of lower highs. You're almost going sideways right here. Take out the 64.07.5, you can go down. The president today, I was just watching as I was going to do this show with you, and I'm watching him on TV as he's headed out for another campaign speech, and he's saying, at least, I don't know how truthful it obviously is, China's ready to make a deal. They wish they had taken the deal that they walked away from. I'm not seeing that. Maybe he knows more than we do, but are you seeing any of that? I read the Chinese press, but you never know what's behind the scenes. With that in mind, this could be a good time for you if you're watching these and you're trying to figure out is futures trading for you. It could be. We've put together a kit. And it starts off, obviously, a brief history of the futures markets. I'm not writing books on this. But then all these different parts are included, including exchange brochures, including graphs that are there. You're going to be able to work with how the market works. This is how the history of it is. Remember, I talk about chart patterns. Here's 14, not 10, but 14 of them. Technical analysis. I try our best to explain it, work it through. Then we're going to have cause and effect sheets with you that explain how money moves through the society. You're going to see trading options. How do you work with them? The cause and effect, that's going back to that money. M1, M2, M3. Sounds complicated. It's really not. Then our series of videos and different trading indicators. We've got a couple. I'll probably make a couple of more different ones for you now that we're getting into the fall. Took a little time off for myself here. The CME Group's educational brochures. They're always changing. They're very good. They've got quizzes with them. You learn from them, and that's how you end up learning something. So how do you get this? And it is a free kit. It's a download. What we do is we'll email it to you. You open it up, and away you go. It's that simple. How do you find it? Go to our website under free trading offers. You'll have a choice there to choose from. Work with that. Or call my staff. They'll be happy to work with you. We might have our new look to our website later tonight. Now, I'm not saying you'll see it right away because once we put it out, it's got to populate on the different carriers that are out there that you might be getting this from, but it'll be pretty soon. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.